Hi, it's Catalina, founder of Loan Sense, coming to you today. This video is for lenders, and I want to discuss today what happens if you find borrowers in the CAIVRS system, which is the Credit Alert Verification Reporting System established by HUD, the U.S. Department of Housing and Urban Development, used to understand who is delinquent, defaulted on federal debt, and if they are in this system, it is harder to qualify them for an FHA, a VA, USDA loan, right? Because, and conventional as well. I mean, lenders also have their rules around conventional lending, but especially hard for the FHA and USDA and VA loans. I want to talk about it today because I want to talk about what can Loan Sense do to assist you and your clients who may find themselves in this CAIVRS system. For example, there are people, and I'm making this video today because a lender reached out to us and shared with us a story of a veteran who had GI funds dispersed to go to a school. And it turns out that the school not only took the GI funds for their school, but had also originated student loans. And they had taken funds from both the GI funds as well as the Department of Ed loan. So this person was now had debt that they shouldn't have had. And that story made me really unhappy because why should a veteran be treated that way? Why should they be promised this education credit and then the school turns around and redeems both on the GI funds as well as require them to pay back student loans? That doesn't make any sense. So that's the story. Well, that's at least what the lender told us. And I just wanted to address today, what can we do to help these individuals? Okay. It's really, really important. A lot of borrowers, this is what a lot of borrowers think when they find Loan Sense and they come to us because they find themselves in the system and now they're like, oh my gosh, how am I going to get a loan, right? Number one, it's really important to understand that a lot of borrowers, they think it's not on my credit anymore. Therefore, it's not like the student loan is no longer on my credit because they've defaulted and gone delinquent years ago. So it rolls off of their credit, or they might even pay a credit repair company to get it off of their credit. So it's no longer on their credit. And they believe that because it's not on their credit, it won't impact them in the mortgage underwriting decision. And that we always tell borrowers that is untrue. If you have a student loan in default, they're going to find out. And they're going to require you to address it one way or another, even if it's not showing up on your credit report, right? So what can we do to help borrowers address it? Well, number one, there are multiple things defaulted borrowers can do, including rehabilitate or consolidating their student loans and getting into a better standing. That is something they can do if they, in fact, are responsible for paying that debt back. And that is what we encourage people. If they go through student loan rehabilitation, it's going to take longer. If they go through consolidation, it'll be slightly quicker. It will still take more time than a closed loan cycle though. However, and by the way, we can help borrowers enroll all that paperwork. The second option in the case of this veteran we're talking about, he doesn't actually believe he owes this money because the school should never have originated those loans because they're paid by the GI bill, excuse me. So what can the borrower do in this case? There is borrower defense fund. There is a borrower defense repayment fund that we could file the paperwork to. There's also options for the borrower to write their state representatives a letter saying, hey, look, like this, of course, is a last resort. But state representatives saying like, hey, this is what happened to me, and the state reps can actually have the power to get it removed if you knew that. Isn't that crazy? And then, of course, there's appeal processes in place by the Department of Ed. But we do know from the VA guidelines for VA loans anyways, that if they're in the CAIVRS system, but they show a balance of zero, that you can actually treat it as a zero towards their student loan payments and that you can move forward with the loan. However, since this veteran does have a balance, we need to figure out alternative ways to help them get out of CAIVRS, including the three possibilities that I just mentioned. It's a sad and complicated situation because most of the time when people are in CAIVRS or in default, it's impossible to get it rectified before the closed loan cycle if they want to close within this month or next month, unless they come forward and pay off the entire balance, which most people cannot afford to do that because they've saved all their money for the down payment, right? Not to pay off their student loan. So those are some of the solutions. However, if the person, of course, needs to rectify their situation before they can close at all, even if they lose the home they're trying to win now, LoanSense can help them so that they can close after we resolve their student loan dilemma, right? So what you could do as a lender is you can always refer them to us, but of course we invite you to a demo because we love to work directly with you. We love to estimate the increased purchasing power of every consumer that comes through with student loan debt through your platform. And we can help you be more competitive by offering a conditional pre-approval at a higher loan value, and be competitive not just by rate, but by actual loan value. We are helping lenders on average increase student loan borrowers' purchasing power by about $100,000 for 2 out of 3 borrowers coming in with debt. So don't turn them away or just deny them, because it may be highly possible that we can close them, and we can close them within 21 days unless they're in delinquency or default, in which case it will take them more time. There's a lot of LOs that send people just to reduce their DTI, and it turns out that said person can actually get complete forgiveness because they've been paying for over 10 years and they qualify for temporary expanded public service loan forgiveness. So Biden has funded to the tune of $20 billion extra dollars of different targeted forgiveness programs. So we work with borrowers to help identify them, and so that it turns out by the time they come through our system, they may have a balance of 0, and that might take more than 21 days, but it's clearly worth it because that will significantly improve their affordability. They will give you the credit. They will refer you. You will build customers for life, and you will be their advisor. You are an advisor. You're not just a mortgage loan originator. You are an advisor. And I would say you are the financial advisor to the common person. So if LoanSense can be here to assist you to add significantly more value to what you're doing for every single client that comes in with student debt, we would love nothing more than to do that. We are launching now for lenders direct to consumer facing tools to talk about our value prop. We have marketing content available, and we also have training to help loan officers understand the scenario. And of course, we help loan officers also understand all the underwriting guidelines so we can get people through and to closing. That is what our goal is. So if you found this content interesting, please subscribe, please like, please share with other loan officers who you see come across the similar problems we're talking about today. And if we can help more loan officers, help more borrowers, that is our number one mission and our goal, is to help more student loan borrowers like myself. I was declined my first mortgage as well, get to closing despite the possibility of feeling like you have to decline them. If they have student loans, they have a high debt to income, they have a high student loan balance relative to income, most likely, and they have federal student debt, we will be able to help them reduce that and get a plan to get to closing. Please consider coming to one of our demos if you haven't already. The link will be provided in the email if you see this. If you're watching this on YouTube, we will provide it in the description. Thanks for joining us, and thanks for following me on my weekly lender and borrower YouTube video updates.